Hello and welcome to the home of profitable trading. My name is Tim and I am one of the traders here at the live trade room. I hope you're keeping well. And what we'll be looking to do is trading the US Open live and interactive. And today now is Thursday, the 11th of March. So for those of you who perhaps are interested in learning how to trade the financial markets with a high degree of, I suppose, knowledge and understanding behind some of the decisions that you will no doubt go on to make and look to trade these markets with consistency and discipline, then we can absolutely help you with that. Do feel free to go to our website, www.thelivetraderoom.com. We do offer traders a vast range of products and services, all at very, very low cost indeed, without any need and requirements for setting up an account or anything along those lines.
Vaccine news now from Sweden.
Sorry, that's our squawk just going off there. So over the next hour or so, what we'll do is we'll prepare everything necessary to be able to tackle these financial markets. We're looking for high probability trading opportunities across some of the world's largest markets, from your foreign exchange to your commodities and also the global indices. So for us, it's quite important to have that baseline knowledge of market correlations, and that can help us gain a bit of an edge in these markets. Okay, so let's get straight into it then. We'll just start with our risk warning. And let's see if we can go ahead and make some cash this afternoon. So please see our risk warning up on screen. Of course, trading the financial markets are inherently risky. So you need to take note of these risks, be mindful of them. And for us, it is one of the major reasons why we are consistently profitable when we trade, is because of our very consistent approach to our ability to manage risk in the first instance. So just before we have a look at the charts, what I'd like to do is just draw your attention to a major news event today. We have, if you see up on screen here, we've got the ECB this afternoon. So in about half an hour's time, we will start off with having our monetary policy statement. We'll monitor the euro very, very closely, see how the markets react. We'll have the main refinancing rate, the interest rate. It's at 0, as you can see up on screen. We're not anticipating any deviation off that number, but we'll keep an eye on the statement and the rate, and for volatility, and then we will have Christine Lagarde speaking to these markets. So it will be quite interesting whether she will adopt a similar approach to the Fed. There is concerns regarding, I suppose, the ECB's intervention within Europe, and it's been contested in the German courts as we speak. So we will see, and we'll be monitoring very closely the price action around this major news event. So we've got a bit of time now to just get the trading opportunities together. Be very mindful about this news event coming up shortly, and we'll carry on from largely yesterday's live trade room through our YouTube channel yesterday afternoon, where we're looking for that dollar weakness trade to continue, but also in last night's live trade plan webinar at 9 o'clock. So what we're looking for is some dollar strength, and you can see against the pound here. This is on the daily time frame against the pound. You can see this up on screen. We were looking at this market pushing to the upside above that 39.35 level. for the pound dollar, and also the Aussie dollar as well, just above yesterday's high and above the 50 period moving average to 77.46 level. So we've pushed on to the upside in both of those two markets. We were very close last night to seeing the pound actually break a really important structural level in this market, which is the 85.43 level. And as you can see, we've kind of bounced off this over the last 2 or 3 days. So what this shows you is how important this level of support is. And if it breaks, then we're likely to see some volatility to the downside. So we do still need to watch this little bit of price action very, very carefully if we can. Sticking with the potential for pound strength, we're also looking at a buy trade in the pound yen. We had a little bit of volatility. We had sort of prices really just failed to kind of close and break above that. And now we do have some form of move to the upside. So broadly speaking, looking for some pound strength. It does look quite weak as things currently stand. The Aussie dollar is finding a bit of a bid. Now we're breaking out of this little pullback. The difficulty behind the Aussie dollar is we've already seen a structural failure to the downside. So I'll just get up my pen. So when these markets roll over to the downside and then they attempt to make a new high and fail, we're very interested in these kind of levels. And as you can see, we have pushed lower briefly over 2 or 3 days, but we've really bounced back off this low. So if we stick to our understanding of how markets move, we can see that we want to be mindful of the potential for the next leg to the downside. So it wouldn't be too shocking to us if we saw this type of price action. Now we need other correlations to fall into place. At the moment, it's looking like quite a supportive bit of price action, but that's why this little move last week, it was quite coherent. This move is a bit of sort of a counter trend type of move. The overall bias in this market is very much to the upside. So that's really why we're ultimately focusing on this little trade to the upside, although there's on the smaller time frames there is significant rollover to the downside for this trade. So we do want to keep our eyes very closely on the dollar weakness trade. That's primarily been the focus of not just today's price action, but this week's really. The pound, we anticipate, has the potential to push higher against the dollar, against the euro, and against the yen. I suppose the yen is giving us marginally the better bit of price action, but if we zoom in on this and you just look at the price action really over the last number of hours, we had that significant breakout to the upside during the Asian session. Then we have a bit of a rollover as the European markets open up, and now we're getting that extended move. So we're just inside these two momentum swing, and we're currently in the middle of it. So will it roll over, or will we get that continuation trade to the upside where it breaks higher? We're not too sure, but those are the levels to focus on now at this stage in proceedings. So we'll take a real close look at the euro now in just a second, just before we potentially get into some of those, to see how the euro reacts to the ECB. So we'll keep a close eye. Pound yen. The Aussie dollar, the gold market is extending to the upside, so we'd expect, well, really from yesterday's high, the 1727 level. We've seen prices push up to the 1740, so not too surprised about that. again, could some of these markets be lending themselves all to a rollover to the downside? And I'll just share with you what that can mean for all intents and purposes. So we can take these three dollar correlated markets, the pound dollar, the Aussie dollar, and the gold, and we're currently in the pullback phase, but we wouldn't be too surprised to see that type of move. It would be in keeping with the price action which just came before it. Same with the Aussie dollar. So although we're pushing higher, we want to keep one eye on the rollover trade to the downside, and same thing for gold. So that's the conflict we have in this market, is that we're not completely sold on the dollar weakness trade. We are getting a bit of dollar weakness as things currently stand, which is fine, but for us the potentially the more significant trade would be if the dollar starts to strengthen again, and that's what these trades would lean towards, that kind of reversal from this little bit of pullback price action across all of these markets to actually rolling over to the downside. So we're going to be watching these trades very, very closely. It's okay to be looking for dollar weakness as long as we're in it for a relatively short period of time, but if they start rolling lower, then we could be looking to reposition ourselves accordingly. Crude oil, so just looking at the commodities then in a little bit more detail. We're clearly in this little downtrend, and this is why we need to be mindful of the next leg to the downside. Okay, we're getting a little bit of pullback. We fully appreciate that's the case, but if we show signs of exhaustion to the upside and it starts to roll back over and it breaks below the monthly low, then we could be back into the downside as far as gold is concerned. Some interesting, I suppose, analysis really. We have the equity markets squeezing higher, and you can see where the gold market is in kind of relation, you know, where we reached these highs of $2,000 a troy ounce of gold back in July, last July, I believe. Yeah, so and we're getting this little bit of rollover price action. So we're the cost of gold is still pretty high if you compare and contrast, you know, over the last 20 odd years. You know, we're still up at these very significant levels, and markets like the S&P are at all-time highs pretty much as well. So we're seeing this unwinding. We're seeing this the gold market unwind to the downside, and there is plenty more downside in this market if it decides to push in that way. So that's why we're pretty bearish on gold, because there's definitely more of an appetite for your riskier market assets, and we've got the fundamental backdrop for that as well. So just be mindful of that rollover trade. We very well may get that sooner rather than later. So crude oil, it's kind of the opposite. It's a momentum market. It continues to push higher. We've got this little move here. We've got the pullback to previous levels of support, and that's why yesterday we pulled the trigger to get into this trade to see if we get prices pushing up to the $67, potentially even above that level in the next leg to the upside. So it's a little bit slow at the moment, but we can afford to stick with this trade to the upside just for now. So with this news event coming up in just a moment, if I just get these trades just back to current price, we'll have a look at the euro dollar in quite some detail. We can see there's a little bit of mild strength against the pound. So where are we at with this euro dollar trade? And this is the market that we're going to look at very, very closely during this ECB news event. So again, very much in keeping with many of the other dollar pairs, we've recently seen a momentum move to the downside, and we are now experiencing that little pullback trade. So we know the ECB are not that comfortable if we're looking at sort of the interest rate as a mechanism to sort of gain a bit of an advantage from an export perspective. We know that the ECB would prefer the euro dollar to be lower. They don't really want an expensive euro if they can help it, but they've also got, you know, the fallout from inflation as well. So, and what that could mean for interest rates. So we're getting this really strong pullback, the euro dollar pulling back off the lows. Sorry. Just, I suppose what we'll do is we'll have a look at it on the bigger time frame just to show you kind of where we're at. Let's have a look at it on the monthly. So we'll just take a little step back. It's just multi-time frame analysis. We've got this descending level, and as you can see, prices just recently broke to the upside out of this little sort of downward range where the dollar had been strengthening consistently since December 2007. So since the financial crisis, we've seen a slow strengthening of the US dollar. And if I just zoom in at this price action more closely, and perhaps we look at it on the weekly time frame, you can see that we had a constructive breakout of this level a number of weeks ago. So going back to November, we had this significant push to the upside for the euro, and the ECB were a little bit uncomfortable with prices up at these levels. But what we've seen since is that little momentum move back to the downside, and it's interesting to just note that this level, until we get the breakthrough, is still an important level.
So, vaccine update from the European Union. The ECDC says 8.2% of adults in the EU have now had their first vaccine shot.
Okay, we're still getting updates on the vaccine rollout. So with this descending level, we'd be always looking for prices to squeeze lower below the line, and if prices break above it and stay above it, then you'd expect continuation to the upside. And now we're coming back to this level. So this is the essence of I suppose, support and resistance trading, where you can identify these levels, and it does make it a bit easier to trade these types of levels. So looking at price action this week now, the last 2 weeks, we had quite a bearish setup for the euro dollar, and now this week, the last 2 or 3 days, we are seeing prices bounce off a strong level of support and are now technically above the monthly lows. So we can expect more upside really as far as the euro dollar is concerned. So that's a bit of multi-time frame analysis. We've got the 119.91, which could provide a little bit of resistance, and then further up the 120.20 level. So we would take a real close look at prices if they were able to get up this high for that next leg to the downside. So we're in kind of a transition phase currently for the dollar. So what we need to understand is whether the dollar strength trade is that over with, because at the moment we're getting technical we're getting price action, which is telling us that we're currently just experiencing a pullback. So we're not necessarily finished with the dollar strength trade, that we're currently, prices are just pulling back against that dollar strength trade. So the actions of the ECB now, and the press conference, the statement, and sort of updates regarding interest rates in the Eurozone is likely to be quite volatile for the pound, for the euro, should I say. So we are looking at about 13-14 minutes. We'll get the news out of the ECB. We'll have a look very, very closely and carefully at the euro dollar at these smaller levels, so you can see how it's been performing on an intraday basis. So we do have a series of higher highs as the market eventually starts ticking to the upside. So it's quite a messy uptrend. It'd probably be a little bit easier for you to see it actually on like an hourly chart, for example. So you can see the rollover to the downside, and you can see how price is behaving here more recently. So we've created a low. We had a little mini structural failure to the upside at that level, and then at this point here we get our second significant structural failure to the upside. So that's quite important. Now we're getting the 50 period and 100 period moving average just beginning to tick and point to the upside. So again, it's just likely to provide a little bit of further upside for the euro dollar. We do want to identify resistance on the way up, so or should I say support on the way up and resistance on the way down. So we're back above the monthly low. We'd expect a little bit of resistance maybe around this level, and if not, then up a little bit further. But we can potentially look for some selling trades at a slightly higher price. So this is what makes it an interesting trade to continue to look at. At the minute, we're in a little bit of no man's land. So we are above the monthly low, but we're just trading at the level pretty much. There's not much volatility there over the last hour or so. In fact, not much volatility really over the course of the trading day. We've really just got, this is a 1 hourly chart, so we've really just got the best part of an hour and a half really of bullish price action. The rest has been very much sideways moving.
We're just under 10 minutes away from the release of the ECB's monetary policy decisions. This will include their decisions on the three main policy rates, their asset purchase programs. Does usually include some guidance as well. In terms of interest rates, economists unanimous in their view will see no change today. All 58 economists surveyed by Reuters see no change in the refi rate at 0. All 68 economists surveyed see no change in the deposit rate at -0.5%. No change seen in the rate guidance either. ECB expecting rates to remain at their present or lower levels until inflation converges towards their target. The asset purchase program, the PEPP, the envelope expected to remain at €1.85 trillion. Also expecting to leave the date range unchanged. Purchase is currently intended to continue at least until the end of March 2022. Also expected to repeat the guidance that was added to the statement last time round regarding favourable financing conditions. ECB said if favourable financing conditions can be maintained with asset purchases, the envelope does not need to be used in full. Equally, it could be recalibrated if required to maintain favourable financing conditions. No change expected either to the asset purchase programme, expected to continue at €20 billion per month.
Okay, so that's just a comprehensive little breakdown, really, of the news event, which is due out.
Restrictions being eased in France. France easing restrictions on international travellers.
So this is our policy statement and refinancing rate. And
going back to the ECB, a couple of previews here from the major banks. From Danske Bank first, they say today's meeting will focus on the financing conditions and the PEPP implementation. They're not expecting any new policy decisions, but a reiteration of all the options being on the table while ensuring easy financing conditions. Danske say the main unknown today is whether the ECB will explicitly coin the recent rise in both nominal and real yields as an unwarranted tightening of financing conditions, or fall short of reaching that conclusion and decide only monitor the evolution of yields. They're leaning towards the ECB concluding a continuation to monitor and remain short of concluding an unwarranted tightening. They say, though, this may come at a later stage if conditions were to worsen enough.
So we've got the refinancing rate at 0 from the ECB, but we've got if you're a financial institution, you wanted to deposit capital at the ECB, you'd be effectively paying negative rates of 0.5 minus 0.5%. So you'd be paying the bank in order to deposit. Obviously, the reason for that is the ECB would prefer these institutions to lend, but they're continuing to. They are continuing to deposit large amounts and take a loss on that. So we do have sort of a strange dynamic where there is a risk-on approach from a certain cohort, and then there's a safety-first capitalization approach from a lot of your big financial institutions. So some of it is regulatory. Needing to keep large amounts of capital on deposit in case the bank's got into difficulty again. But it's probably gone, way too far, and it's required the ECB to obviously have negative rates for deposits at the ECB. So it's really just that focus. It sounds like it's going to be, reiterating what we've heard many, many times before. We're going to be accommodative. We're not going to increase interest rates anytime soon, and we'll look to get over the COVID situation. We'll have obviously the rollout of the vaccine. We'll have economies beginning to open up fully once more. Hopefully everyone can get back to some form of normality, which is not occurring just yet, but it's all in the pipeline. So we would imagine the theme would be kind of steady as she goes, and the ECB would probably be favourable in terms of looking to do whatever's necessary when and if the time's right, but they'll have a close eye on bond yields. So it'll be interesting to see what Christine Lagarde says regarding bond yields today. Just on that, we do have a 30-year bond auction in the US again today. Let me show you just quickly. We've got a few more minutes before the event. So there's a 30-year bond auction. Yesterday we saw a 10-year bond auction, so actually went surprisingly well. Now we've got the 30-year. Might we see yeah, so that 10-year yield is just sort of squeezed a little bit lower. We had been on a tear for quite some time now. Well, since obviously the turn of the year, basically we've seen a very significant uptick in bond yields from around 92, and we're now up at 150. So there's been probably a 50% uptick. 50-60% uptick in bond yields in the last month and a half, and that's what freaked out some of these markets last week. You see, so and we have a 30-year bond auction today, and if I just clarify exactly what time, yeah, again 6 o'clock.
From the European Central Bank's monetary policy decisions, no change expected in rates. Refi rate seen unchanged at 0. The deposit rate seen unchanged at -0.5%. Then move to the asset purchases, the PEPP program. Seen the envelope seen unchanged at 1.85 trillion euros. Expected to run until at least March 2022.
Yeah, so just going on to the bond yields. Yesterday we had 10-year. Today at 6 o'clock we got the 30-year. The problem was last week or a week or so ago, for those of you that are just even mildly interested, and we'll come on to the euro dollar now in just a second. I'm just conscious of this news event coming out shortly, so we can see if we get any erratic price action. We wouldn't necessarily expect a huge amount, but just quickly on the bond yield story, there was a 7-year note auctioned off last week, and the demand for that note was very, very poor. So as a result, we saw the yields actually increase quite significantly. Yes, Rome Boss, good afternoon. Yes, this is a live, absolutely a live session, so you're very welcome to join us.
1 minute till the ECB.
So we've got 1 minute to the ECB, and feel free to ask any questions as well if you've got any questions, or if there's anything we can help you with. We'll have a look at it shortly. We're just rolling into ECB now, and we're looking very closely at the euro dollar just to see how that reacts to the statement and the refinancing rate. Yeah, so it just the 7-year bond auction just rattled markets because yields started to increase, and the I suppose the consequences of that. We've got this stimulus environment. Certainly in the US, we've got the potential for more money in people's pockets, so inflation starts to increase. That'll lend itself to kind of a stronger growth type environment. As a result of this sort of stimulus and growth background, we'd expect interest rates to increase. And if that's the case, then that's bad news for your indices markets.
Rates are unchanged.
Rates are unchanged.
We'll continue with asset purchases under the PEP, total envelope of 1.85 trillion until March 2022, and in any case, until they judge.
So look at the move that we're seeing. So rates are unchanged.
Can be maintained with asset purchase flows that do not exhaust the envelope. The envelope does not need to be used in full. Equally, it can be recalibrated if required to maintain favourable financing conditions to help counter the negative pandemic shock to the path of inflation. So no change on the PEP rates or the PEP guidance. They'll continue the APP at 20 billion euros per month as well.
So we've got this significant level of resistance and support, and we can see what's happened over the last 30 seconds. Well, that's 1 minute now.
On a joint assessment of financing conditions and the inflation outlook, they expect purchases under the PEPP over the next quarter to be conducted at a significantly higher pace than during the first months of the year. ECB will purchase flexibly according to market conditions and with a view to preventing the tightening of financing conditions that is inconsistent with countering downward impact of the pandemic on the projected path of inflation. In addition, the flexibility of purchases over time across asset classes and among jurisdictions will continue to support the smooth transmission of monetary policy.
Okay, so just wanted to show you there the reaction on a 1 minute time frame. Now we're entering quite a dangerous zone from a trading perspective because yes, we've got the statement, and I'll share it with you. Currently up on the screen.
They stand ready to adjust all their instruments as appropriate.
So what we have here is...
So to recap, European Central Bank, no surprises on interest rates. The refi rate unchanged at 0, the deposit rate at minus spot 5%. The envelope purchase programme remains at 1.85 trillion euros. The guidance on the date as well, no change there, will run until at least March 2022. Have reported they will be front-loading purchases, it seems, this year though. They expect purchases over the next quarter to be conducted at a significantly higher pace than during the first few months of the year.
Okay. This monthly low is really quite an important level of support and resistance in this market. If I show you on the daily time frames, and do you remember we were just talking about, those of you that were just with us a little while ago, we're getting a bit of an uptick in the last 2 or 3 days, but this is very much your secondary trend type of opportunity, and we look very, very carefully at really strong levels of support and resistance, and that's what this level becomes. So if prices fail to make new highs and we start seeing that rollover price action, then there's your high probability trade to the downside. But unfortunately it'd have to be below the monthly low. I'll just show you a bit more of this. So it's just, and so far it's reacting, it's attempting to squeeze above the monthly low and it's failing to do so. So that's the first indication to us to look to actually get in on a reversal trade, which would be your momentum trade actually. So we're in this transition phase last 2 or 3 days, and we will see if we end up coming out of this phase or not. The problem is we've got Christine Lagarde now in about half an hour, 40 minutes. So the 15-minute time frame is just hanging around really the monthly low, the 1950 level for all intents and purposes. Rome Boss, you're very welcome to join us. Yeah, delighted. So we've only just started to launch these webinars live, and we do it every day, Monday to Thursday at 12 noon UK time. I'm not sure where you're joining us from. And if you have markets you'd like us to have a look at, we can do that as well. So it's just really a forum where you can I suppose benefit from our knowledge and experience. We've been trading these markets for a long time. I've been trading them, I'm going on 13 years now. So if we can help you, we can do. And there's a lot more information as well over at the live trade room. .com website, so and you can contact us as well through the website if you need. We do have trade plan webinars every evening at 9 o'clock, which allows us to be well prepared for these markets. They're only 30 minutes long, but that can give you a significant advantage prior to the moves obviously occurring. It's no use talking about them after the fact. And then today and kind of yesterday, we're in these secondary trend phase. So we've not been that active. We are currently in the crude oil trade to the upside. So again, this is just purely a support and resistance type trade. So the market broke above the monthly high. And we saw a nice momentum move up to the $67, $68 level, and we've had a significant pullback again to previous resistance, which now becomes support, and it's a straightforward buy trade, hopefully back up to the $67 level. So that's the trade, that's what we're looking to do, and it's slowly getting there. It's not, we're not seeing explosive price action, but it's slowly grinding to the upside. We're heading in the right direction. We've got these lows in here now, so there is an opportunity when we break this level up here So we're seeing. Sorry, let me start this again. So it's a little bit erratic, but we're making progress, believe it or not. So we've got a series of higher highs and now higher lows. So this is our low, this is our higher low, this is another higher low. So and this is the definition of an uptrend. We're obviously just looking at the 15-minute time frame right now, but this is a high, this is a higher high. So this is we're trend traders, so we want to identify these market conditions, markets ticking to the upside. So we're looking for a buy in crude oil, and looking to trade what we see, which is these patterns setting up, and it gives us a green light to get into trades like this. So hopefully we'll get that further movement to the upside. And what we can do if we break above this high, this 65.
ECB press conference next up at the bottom of the hour. A link to the press conference with ECB President Christine Lagarde is up on the board.
So what we can see with this market is if we break above this level, we can probably remove all the risk on the trade. So currently,
President Putin commenting on the OPEC Plus decision says they mean stability for the Russian economy.
So we've got this low is just sitting in here. I'll just remove some of this information for you. We've got this low sitting in here. If we break above this high, which we would expect eventually, then we can bring our stop loss, take the risk off the table and bring our stop loss up to this level. So there's no risk involved in this trade. And hopefully we can hold on to it for a sizable, profitable trade with that one. We just need to be patient. You see, that's the key really to some of these trades at the moment. So just focusing on the euro dollar again, just to see what's happening. So there is mild bearish momentum. From a pip perspective, we're talking about 10 to 15 pips, so nothing to get too excited over, unfortunately. A sell trade, if this price action occurred below the monthly low, so let's say on in this level, there might be a greater argument to look to get in on the sell trade if we had that same price action in this light zone, for example, because we'd have the monthly lows above it, so we'd have lots of these levels of strong resistance, which we could use to our favor. But we're getting this price action actually above the monthly lows, the important sort of 1915 level. Our bias is still largely to the downside, even though it's been pulling back fairly recently over the last 2 or 3 trading days. But we're looking for that rollover trade back to the downside for the euro dollar. So it's not convincing, and from a pip perspective, it's not. There was sort of conditions. Those of you that are perhaps have a little bit more experience under your belt, if you went back a couple of years ago and you experienced an ECB event, it had every potential to be quite explosive. You could get a 100 pip move in 30 seconds. Huge volatility during these events, and now because of the nature of monetary policy and forward guidance and the fact that the system is awash with capital and stuff, it's kind of distorted some of these events, and you're getting an ECB event with sort of a 10-15 pip sort of range-bound price action, which is historically it was absolutely nothing. So going back to our trade plan from last night, and this price action in the euro dollar only helps to just confuse things perhaps just a little bit further. On the daily time frame, it's just a straightforward pullback and really struggling to break above that monthly low. The Aussie dollar, it looks like it's continuing to the upside. So from last night's live trade plan webinar, we were looking to buy the Aussie dollar above the 77.46, so some good movement in that trade. The pound dollar, the 39.35 level, so we are above those levels as we currently speak, and we'd expect a little bit more upside perhaps in these markets. What we would be concerned about is the turnaround trade, is when you start seeing a series of structural failures across the lower time frames. That would be a reason to get out of those trades. So they're performing well. The gold trade is we like this above the 1727, and now it's pushing up to the 1740 level. So that dollar weakness trade is still very valid. We've been looking at it and talking about it over the last 2 or 3 days. It's technically still in play, but it is a secondary trend trade, so you just need to bear that in mind. Then the focus shifts to the pound. So we've got a strong pound against the dollar. If I zoom in a little bit more, you can see the recent price action here in the euro pound below the 85.43. So that is a concise level to look to get into this trade. It's an important level of support, and if we break that level, a lot of traders and investors will be looking at that price break. Obviously we'll have some pound strength across the board, and we're likely to see some further volatility to the downside. So it's just really about focusing on the higher probability trades, not looking at every trade that may or may not be moving, but to actually be quite focused and concise in what we do and the decisions we make. The equities are showing signs of continuation to the upside. The Nasdaq,
It's been reported the European Drugs Agency is said to recommend the Johnson & Johnson vaccine for the bloc.
Okay, that adds a whole host of other vaccine options into the market, which is really good for certain jurisdictions. Obviously, those that have deficits, vaccine deficits rather than surpluses, that's really good. The Johnson & Johnson, if I remember correctly, has a lower efficacy rate. I think it's in the 60s, unless I'm mistaken. If anyone knows for sure, do let us know. But I think it's in the 60s for its efficacy. But it's really powerful in terms of hospitalization and
reaction
death.
Here to the ECB policy statement from Peter Christensen. He's the chief strategist, ECB and fixed income watcher at Danske Bank. He says the statement is more dovish than expected. However, the word prevent a tightening of financing conditions does mean the ECB will not push rates lower, but they will be clearly providing a backstop. He says there is an important difference here. Says there are still a number of unknowns on the metric and level on the financing to look at as well, so ambiguity is still here. Hopefully Lagarde will clarify at the press conference. Meanwhile, comments from the White House economic advisor Deese says the COVID relief direct payments are expected to go out this month. Comments made to CNN.
So we've really got conditions that are now quite positive for the equity markets yet again. We've got the DAX at all-time highs, so just be mindful. We're just running into the ECB. Christine Lagarde, she needs to clarify, by certain use of words like prevent and backstop and all that kind of stuff. And I guess the markets will be just digesting what that means. And again, historically, when we used to have Mario Draghi, and again, they can be quite volatile events. So we don't necessarily want to trade the news event. We want to trade the price action that follows it. So as you can see, there's a bit of positivity for these indice markets. And just very quickly on Bitcoin, there was a bit of a rollover to the downside, really, for the majority of today, and now we've sort of pulled back, and we're now squeezing back up to those all-time high levels in Bitcoin as well. So we have this risk-on market condition for the equities. So it does lend itself to further dollar weakness with these equity moves. Sorry, I'm flicking from chart to chart just because I'm just wanting to just get a little bit of an overview. So we can safely say when we look at these markets, we're looking for dollar weakness, not so much against the euro, but we can safely say against most other markets like the pound. Potentially the yen shortly, although the yen is quite weak against the euro and the pound, so it's probably not the best of high probability trades to focus on. The CAD is now beginning to strengthen. Let's have a look at the CAD to the downside. Oil is pushing higher. Let's look at it on a bigger time frame. So we conduct an awful lot of multi-time frame analysis when we trade. So here is your significant period of consolidation. Been drifting sideways. We're not interested in trading these moves, but we are very interested in potentially trading that.
We're here in Norway suspending the AstraZeneca vaccine rollout. That's a comment from the Norwegian Institute of Public Health.
Okay, that's a bit worrying for the AstraZeneca vaccine. I think there was wasn't there a couple of deaths, unless I'm mistaken, with the AstraZeneca, but it was more of a batch thing, and apparently they had underlying health conditions as well. If I've got my vaccines right, of course. So they're suspending the use of that vaccine. Seems a bit harsh, but they've obviously got reasons for those decisions. The other thing that will actually support the Canadian dollar to the downside is the oil markets. So again, this is really why we trade multi-asset class, because we can get we can kind of get a heads up from what's happening in other markets, and we can sort of get in on that basis, and it's just supportive of the trade. So the more reasons that you can support a trade,
D says they'll
better.
constantly monitor for an inflation risk. It says inflation is a risk and we will keep an eye on it.
So we can have a look at these in a little bit more detail, because they're not sort of as clear cut yet as they could be, but we could be getting close to sort of a little momentum breakout to the upside for this. So 39.17 to 39.62, so we're talking about sort of a 45-50 pip stop loss on this trade at present. There's plenty upside in the trade, so we can so now we're getting the breakout to the upside, so we can look to get into this trade. We're breaking out of this level of resistance. The multi-time frame aspect of this trade is to the upside, so we can just see now. So again, it just reverts back to our process that we always use when we get into a trade. You know, what sort of confirmation do we need before we pull the trigger? The two things are, you want to see a close above the 39.62 level. You know, we can probably just edge it a little bit higher. So we're getting that move. So we're getting, this is all on the minute time frame as well. So I'm just looking at a couple of things off screen. Okay, so we've got the close, and really when we get a little bit of volatility like you're seeing here, we're never really that eager to be jumping straight into it. Sometimes we have to get in 10, 15 pips higher than we would like to, but most of the time...
The Italian Medicine Authority will ban the use of a batch of AstraZeneca vaccines after notifications of some serious adverse effects.
That doesn't sound good for AstraZeneca. So this is your breakout trade. So again, apologies those of you who are quite familiar with, I suppose, the process by which we enter trades, but we've got a clearly defined level of resistance. So we would expect, you know, these levels to stack up until we get a confirmation that this price is going to break to the upside. So objective of number one really is close. It is actually the close above or below support resistance. So we've clearly got that. That's what you can see there. So that's potentially a bit of a green light. But the second thing is what you need to see is the follow through. Okay, so what we can see from this example really is we can see that the breakout trade, but at the moment this is a false breakout to the upside. So
the Italian Medicine Authority does clarify that this move is precautionary, say there's no link between the vaccine and these events has been established to date.
Okay, so so we had the close above resistance, and then did we get the follow through? The answer is no, not just yet. So we can be a little bit patient. Unfortunately, an awful lot of trading nowadays has become a lot more patient based. So that's why we like this level. We want to see as many touches as we can where prices bounce off that level, and this is it's been quite volatile. I suppose 51. Some of these swings. So there's 25-30 pip swings really, so it's not too bad. So will we get this next push to the upside? It looks like we're going to get it. So we wait for the confirmation, the close above. So what we can do is we can get our deal ticket ready.
ECB said to agree the risks to the outlook have become more balanced. Beliefs coming from sources. ECB said to agree risks to the outlook have become more balanced. Meanwhile, the European Medicines Authority recommending granting a conditional European market authorization for the COVID vaccine from Johnson & Johnson.
$46.
Going back to the ECB, indeed, sources piece ahead of the press conference. ECB President Christine Lagarde will say at a press conference today that risks to the economic outlook have become more balanced, according to officials. She'll present updated projections for growth and inflation that will be broadly unchanged compared to the previous set laid out in December, said the officials.
So there's quite a lot of volatility in and around this bit of price action now. So this is a little bit of capital coming in. So look, right, we'll take this trade. We do have a 50, it's probably a 50, 51, 52 pip stop loss on this trade, but it's quite volatile, isn't it? So okay, so let's go ahead and get into this trade. So we're looking to get in above 39.62. We're currently at the 69 level. We've got our stop loss at 139.13. You see, that's the bad news about this trade, is we need to work with a slightly larger stop loss. You know, this level in here, the 39.17. You know, this is just grinding price action to the upside. So this is probably the better place to place your stop loss short term. So let's go ahead and get into this trade then. Right. Okay, I wonder where this level was. So we'll go ahead and get in at this trade. So we're getting in at the 39.71. Did we just double check? Yes, the 39.72 is our entry with the spread, and our stop loss is the 39.13. So this is a live trade we're taking now, and just looking at the daily time frame, there's plenty more upside, and actually, you know, today's stop loss is actually below the daily low, so that's even better. Of course it would be, because we were looking at the hourly and there was a good sort of 15-16 candles, so that's exactly what that means. So we're looking for momentum to further to the upside. The Aussie dollar was the other one to the upside above the 77.46, and we're just breaking out of that trade pretty shortly. See, this has got a more cleaner, defined stop loss for us, and we could be close to getting into this one as well. So this has probably a 20, maybe a 25 pip stop loss Hopefully something in and along those lines. Daily, there's our uptrend, there's our move to the upside. So we've been sideways for most of the European session really, but we might get some capital coming in, pushing prices higher. It looks like we very well may do. So we can zoom in on the smaller time frames. Let's look at it on the 5. So we're not quite there yet, because what we want to avoid is this market going up to this level and just reversing back off it. And that's the nature of support resistance.
The UK Medical Authority says it's not been confirmed that the report of the blood clot was caused by the AstraZeneca vaccine. Comment from the UK's MHRA.
So we're in the pound dollar trade to the upside. We're going to be very close to getting into the Aussie trade to the upside. We just need to just break above that level there, so we can keep a close eye on that. The dollar Swiss, it's seeing that sort of dollar weakness trade kick in across the board, as you can see. So further downside below the 92.71. Same buy trade. We won't sort of flood the dollar weakness trade, but we will get into the pound and the Aussie. It just gives us that that commodity currency and the non-commodity currency. So we'll have both sides represented in that trade. Crude oil is continuing to tick higher, which is good. So it just remains to be seen whether we'll see that uptick in the Aussie dollar. Just have a quick look at the New Zealand on the smaller. So similar type of setup. Still off the highs. Above the 72.37 is a viable entry to the upside, and the 72.16 to the downside. So you're talking about
we're just under 10 minutes away from the bottom of the hour and the release of US jobless claims for the latest week. Initial jobless claims, we're looking for a rise of 725,000. The range 696,000 up to 800,000. That's against a prior 745,000. Continuing claims seen at 4.22 million. The range 4.1 million up to 4.9 million. And that's against a prior 4.295 million. Also get the start of the ECB press conference with President Mario Draghi. Today's press conference will include updated economic forecasts as well. And we're also expecting the release of the monthly oil report from OPEC. Our focus at the bottom of the hour will be on the jobless claims numbers. We'll put them out first. ECB press conference usually gets underway a minute or so after the bottom of the hour. We do have time. We will report the OPEC headlines. Full details of the report will be on the board though. Do apologise, should have been ECB President Christine Lagarde, not Mario Draghi. My apologies to Miss Lagarde.
So used to saying Mario Draghi. He's now in Italy, of course. Okay, so
going back to the ECB and on the subject of the staff economic forecast, Nordea in their note for today's meeting, they're expecting both the growth and inflation forecast to be revised higher, however mainly for the shorter term. BNP Paribas with a similar assessment as well. They're expecting the forecast to be updated for recent data rather than reflecting any major changes of view. They say notable is the likely rather marked increase in annual average inflation for this year. They're expecting the rise though to prove largely transitory, with the increase for 2022 being only marginal. Crucially, they say, they're anticipating the end of horizon inflation forecast to remain unchanged at 1.4% for 2023.
Just a quick one on unemployment claims in the US. With an opening economy, with a very accommodative Fed, with the stimulus package, and the fact that businesses can start getting back to some form of normality, depending, I know it's very much from state to state in the US, but you would imagine that this figure would be marginally better than anticipated, or be prepared for a marginally improved unemployment claims situation in the US, and their vaccine rollout.
Johnson & Johnson say if granted conditional marketing authorization by the European Commission, the Johnson & Johnson single COVID vaccine will be available in the European Union.
So we'd expect a sort of a marginally improved unemployment claims number, you would assume. So we're anticipating 730,000 unemployment claims. We'll see if there's an uptick or a downtick to that. So we're seeing a little pullback off these highs. It's on the bigger time frame. On the, we're getting a little rollover in that. I suppose this is the nature of trading a market which has been for 12-14 hours just grinding higher. That's very much the reason why this was the only real stop loss placement. You could look at these lows, but they're precarious. These are just like levels at which the market just rejects to go any lower. But from a structural perspective, this is your pull back to previous support, and then you just get the next accelerated move to the upside. So this is a strong rejection of the highs. You don't want to see that if you're buying a market, but there's plenty upside in this trade over the coming. And if I just zoom out on the pound dollar as well, you know, we've been in this little bullish trend now since September, so you can see prices just continuing to rocket. And every time prices get in and around these levels, we're just looking for buying opportunities. It's nothing more complicated than that. And okay, we've slightly pushed back lower, but in line with these levels of support and resistance. So the market continued to the upside. We had a pullback, and now we're seeing the next leg to the upside. So it is a primary trend. We can put up with sort of little bits of price action, you know, like this, for example. That's negligible if you have your stop loss in the correct place.
It reported the UK government has postponed the plan for new checks on EU food imports from April the 1st.
Okay, so we'll see how we get on with that trade. On the daily time frame, it's absolutely flying, so we're getting a little bit of a pullback right now, but it remains to be seen how long that will last for. So we like this trade to the upside in the pound dollar. The Aussie dollar to the downside, to the upside, but it would need to close above the 77.84 level, and it's not choosing to do so. Not too much volatility to the downside for the dollar Swiss. The New Zealand dollars is struggling to make new highs. The pound yen is continuing its move, but sort of slow and grinding, and we're already in the crude oil. So So we
We're
leave
just
those
under 3
trades
minutes away from the
running.
bottom of the hour. US initial jobless claims looking for 725,000. Continuing claims seen on 4.22 million. Also awaiting the start of the ECB press conference with President Christine Lagarde and the release of the OPEC monthly oil report as well.
So we're going to just see these figures, the unemployment claims numbers. See
the link to the ECB press conference is up on the board.
And we'll have the ECB, and we can expect a little bit of volatility. So we're going to have to end the broadcast shortly after 1:30 UK time. So we are live on here between sort of 12 and 1:30. Mondays to Thursdays. At the moment, we can't do Fridays, but we will be back with Fridays as well pretty soon. So we'll see the unemployment claims. We'll just see an initial reaction really to the ECB press conference, maybe for a minute or two, and then we will say good afternoon, and we'll continue to sort of look to trade these markets. And if there is anyone that would like to, I suppose, have a considered approach to trading these financial markets, where you can be consistent in your decision making and be quite disciplined with your capital and look to make conservative growth over time, we can certainly help you with that. So do go to a website. You'll see what we can offer traders. It's a live trading environment every single day, and all at very, very low cost. We all trade our own capital. We do very, very well out of trading our own capital.
1 minute till data.
So our price point can be practically minimal, and I'm sure you'll find that's the case if you go to a website. So we've got a lot to offer, and if you'd like to take us up on that, we'd be delighted to have you jump on board. Okay. And we'll be live through our YouTube channel every Monday to Thursday at 12 noon UK time. So if you can join us for the session live, you can do so, obviously completely free of charge. And we'll be delighted to go through these markets and look for these high probability trades. So we'll just see if there's any initial response from the unemployment
10
claims.
seconds.
Just have a quick look at the
$712,000 for initial claims, 4.144 million for continuing claims. The prior initial claims was revised up to 754 from 745,000.
so marginally better.
The prior continuing claims has been revised up as well, 4.337 million from 4.295 million. OPEC pointing to a weaker market outlook as they keep a lid on supply.
So not really surprised. It was pretty much what we were saying.
OPEC sees world oil demand rising by 5.89 million barrels a day this year. That's an upward revision from 5.79 million last time round. Full details of the OPEC report will be up on the board. ECB press conference is now starting.
So the unemployment claims, not surprised really to see a slight uptick. The conditions are obviously improving. The rollout is going really well, and they're awash with vaccines. I think was it a couple of days ago they did 3 million people in one day, something like that. So amazing sort of turnaround really in fortunes.
Lagarde says there remains uncertainty regarding the near-term economic outlook.
Yeah, so it'll be quite useful to actually monitor the dollar. You know, we had this little bounce to the upside. We made a new high. We've reversed back to the downside. So a little bit of up and down we can expect. Yeah, Rome Boss. Yeah, you can get in touch with us. You can have a look at what we do. We have daily live trade rooms at 9 o'clock every night, and we have a cohort of traders who trade capital. Don't really have the time during the day. Depends how much time you have available, you see. So we've got an intraday opportunity where we've got our signal service and on our live trade rooms and our trade plan webinar every evening at 9 o'clock for 30 minutes. It doesn't take up a huge amount of time.
Mainly on account of some transitory factors.
Okay, I'll just turn that off then for now. And then for those who can only spend sort of 15-20 minutes every evening trading markets, they can join our Capital Growth live trade room at 9:45 p.m. UK time. So so I've got a couple of options there, depending on what it is you're looking to do, how much time you have available, and we can certainly help you navigate these markets and access obviously daily mentorship as well along the way. So hopefully you'll find it a really positive experience. You like this kind of training? Brilliant. We're trading the markets, like I said, ourselves. So if we can help you and assist you along the way, we'll be delighted to do that. Risk management is quite important for us. So like our trading tools, like our risk management software, where it allows you to calculate precisely how much capital you're committing to a trade. Again, there's lots of little things like that would be profoundly useful for any trader starting out. Can I ask, have you got a bit of experience? How long have you been trading for, perhaps? Rome Boss, if you could let me know, that would be quite useful. Are you new to trading, or have you got a bit of experience? I appreciate there's a wealth of content out there on the internet. Not all of it is that useful. I'm sure you'll probably agree. Just looking at the euro dollar trade, as you can see, we've still only got like a 1973 the highs, 1943 the lows. So there's still pretty much a 30 pip range in this market, as you can see. So there's your highs, there's your lows. And it's still very indecisive at the moment. So there's still a bit of a question mark over this trade. One of the difficulties that this market will have is the fact that the dollar is weakening across many of the other markets. Not so much the yen, but against the Swiss, against the CAD, the Aussie. It's just rolling over these highs now. It's and the New Zealand, so it's going to slow up the euro dollar trade. So we kind of want to get a high degree of correlation across some of these markets, and when you get a standout, sort of a lone wolf type move, those are not often the best trades to get into. Okay, unfortunately we do need to end this broadcast, so for more information do feel free to go to our website. It's just up there on screen, thelivetraderoom.com, and do contact us if you have any further questions as well. Rome Boss, if we can help you, would like to. And we won't be live through this channel tomorrow, being Friday, but we will be back next week, Monday to Thursday at 12 noon. So if you can join us for that, we'd be delighted. A thumbs up, we'd be very grateful, and subscribe to our channel. We've got a lot of trading content which will be coming online now pretty soon as well. A lot of that which is coming. So Rome Boss, you've been trading for years on and off. You even got a funded account and lost it due to inconsistent loss of profit. With FTMO prop firm, yeah, you're looking to be consistent. I mean, that's exactly what we'll help you with. It's not the most exciting of, I'm sure, what we find is people are very excited about how much money they're going to make and how quickly will they become a millionaire. The reality is it's a skill that needs to be learned, and being consistent takes a little bit of time and effort. And and there's no alternative for it. Any profitable trader we know have spent many hours in front of trading screens, learning what trading is all about, and being in tune with the markets, and understanding the psychology that sits behind these markets, and having an approach that is reasonable, that is designed to give you an edge, and all these sorts of things are the kind of the things that we teach our traders. So we'll have no doubt whatsoever, like, for you to get a funded account and to lose it means that you're oversizing, you're taking on too much risk, and probably unable to control that risk. Now, I don't know too much about the details of obviously what you were getting involved with, but we've heard it many times before, and for us, risk management is what trading is all about. And it's managing that risk, managing the trades, and looking to mitigate risk as quickly as we can, get those risks off the table. We don't take large losses, and that's one of the keys to for us to be consistently profitable over time, because we just don't take big losses when we trade. So if we can help you with a lot of that sort of discipline and consistency, I'm sure you clearly got an interest in trading markets. It is a shame that there's an awful lot of complete and utter nonsense out there, and a lot of it is online and things like that, and on YouTube and stuff. So if we can counteract a little bit of that, then all the better. So look, if we can help you, we'll be delighted to do so. But like I said, we'll be live on this webinar every Monday to Thursday at 12 noon. I'm just looking at the euro dollar just off. Well, no, sorry, it's on your screen now currently, isn't it? So we'll see these markets just ticking lower. Yeah, the pound dollar is just sort of rolling over. It looks like maybe a little bit of sort of very mild dollar strength beginning to roll back in, so we shall see. Okay, so look, I do apologize. We do have to, we've got other traders waiting, so we'll need to unfortunately end this broadcast, and we'll see if there's any major volatility. If we get into any trades, we'll post them through our Signal service, of course, for our members, so that you'll get updates on any decisions we make on these markets with complete transparency. That's important. And we'll see what today's trading day will bring us. We shall wait and see. Okay, so look, thanks very much for joining us. As always, do take care. For more information, just go to the website. We'll be happy to answer any questions that you might have. And we'll see you. Have a great weekend. Enjoy the weekend as best you can. I appreciate many of us are still in kind of lockdown type conditions. However, enjoy the weekend, and we'll see you all next week. From everyone here at the Live Trade Room, take care and bye for now.